Welcome everybody. Let's talk about Bitcoin. So the biggest news to come out of the cryptocurrency space and Bitcoin this week just gone is that BlackRock's ETF, that's the spot ETF, IBIT, absolutely skyrocketed to 10 billion in assets under management, right? So that's a new record. That is absolutely insane. What you need to understand is there are well over 3,000 ETFs and only about 100 of them are at that $10 billion level. And here you've got the Bitcoin ETF literally hitting that $10 billion mark in a very short period of time, just 7 weeks. Absolutely crazy. But let's take a step back and think about this. So before the spot ETFs landed, what were your options when it came to buying Bitcoin? You could go to an exchange like a Coinbase or like a Gemini. You can store Bitcoin on your wallet. You can use cold storage, hot storage, all of that. But now you've got a game changer with the spot ETFs. And what that means is there is so much money and there's so many people who haven't yet touched Bitcoin because it was hard for them to access it. Like, think about it like this. You're a 65-year-old guy. Your name is Mr. Roger. Mr. Roger isn't there watching YouTube videos of how you log into Coinbase and go to Coinbase Pro, transfer your coins into your hard storage and plug in all your keys. He's just not doing that, right? But with the launch of the spot ETF, now you've got someone like Mr. Roger who's able to easy access crypto. It is an absolute game changer. Now think about it like this. Mr. Roger will be there doing whatever he's doing, right? Running his business. He's going to get a call from, let's say, his wealth advisor at Wells Fargo. The guys at Wells Fargo are going to go, Mr. Roger, something just come across my desk. You're going to like what I've got for you here. You got the opportunity now to get into Bitcoin. Because BlackRock, which is the largest asset manager in the world, $1 trillion under management, they've just launched a new spot Bitcoin ETF. Absolutely skyrocketing right now. Tons of future potential. What we recommend is put a small portion of your capital into the spot ETF. Mr. Rogers is going to be like, that is a good idea. I'm going to go ahead and put a little bit of my capital into the ETF. Game changer. That's why you've got these spot ETFs absolutely skyrocketing. And you think about it like this. When it comes to the spot ETFs, who are the main people who are buying in? It's not going to be your 19-year-old who's watching YouTube videos about crypto. It's going to be the older generation, right? The older client, as well as the institutions. Now think about it like this. Who controls the majority of the wealth in this world? The older generations and the institutions. Now they have a much easier way to go ahead and access what is the best performing asset in the world. That is cryptocurrency. They're able to do that under a much stricter regulatory framework. It's much easier for them to get in, and they're going with a trusted asset manager, the largest asset manager in the world, BlackRock, right, has given their stamp of approval on cryptocurrency, on Bitcoin. And it's in this early innings. There's going to be thousands of Mr. Rogers all over the world, all over the States, all over different countries who are going to be getting calls from their asset manager, their wealth manager, telling them about the spot ETF. So that's why it's very early stages when it comes to this new way of accessing cryptocurrency, especially for the older generations and the institutions, right? The younger people, yes, they're still gonna use the exchanges and all that kind of stuff. But the older guys, the older generation, where all the money is, they're gonna want a platform that is regulated and is much easier. They don't want to be messing around with wallets, token, cold storage, hard storage. They don't want to be messing around with all of that stuff, right? So it is a big deal. It's a big move for Bitcoin. Let's take a step back though. Let's think, how do spot ETFs work, right? Because I think a lot of people don't quite understand exactly how it works and exactly how these asset managers have created this ETF. So essentially, it just moves exactly like it's an investment vehicle, and it moves exactly like any other listed asset on the stock market, right? So the price will change daily. But here's the thing, the asset manager, so BlackRock, will go ahead and they will buy Bitcoin. They'll buy Bitcoin, they'll hold Bitcoin, and the ETF should reflect the changes in the price of Bitcoin. But the crazy thing is this, they're accumulating massive amounts of Bitcoin. So you can see that all the spot ETFs held over 700,000 Bitcoin as of the end of February. But the ETFs, they're not trading vehicles. So they're not there selling Bitcoin, buying Bitcoin every single day. What they're doing is they're buying up massive chunks of Bitcoin. The price of the ETF is fluctuating, but they're not selling the Bitcoin daily. They're holding it. Why is that important? Think about it like this, because if they are buying chunks of Bitcoin over 700,000 and they're not selling it every day, that's impacting the supply and demand fluctuations, right? That's impacting the supply and demand dynamic of Bitcoin, meaning that they are actually holding back a little bit of the supply of Bitcoin, which makes it much more valuable, right? That's how your ETF works. And the price of the ETF is driven by the movement in Bitcoin, so if it goes up or down, and the inflows and the outflows, right? So the combination of the two. So if there's price of Bitcoin's going up and you've got inflows, price of the ETF is going to go up, which is exactly what we're seeing right now. That's how it works. However, even though we've seen the rollout of the spot ETF in the US, it's still new in terms of it's touching different places in the world. So it just launched in Brazil. That was back end of this week on Friday. But there's so many other places in the world where you're just not able to access that ETF. For example, in the UK, you can't access the spot ETF. So as that rollout continues, that's going to increase appetite. That's going to have an effect of increasing flow into the ETF, into Bitcoin. Increased demand increases price. So right now we are at the early stage of the transformation of Bitcoin. Much easier access for the cohort of this world that owns the majority of the wealth. So it's a big move for Bitcoin. There's a lot to come for it. But check this out. So you've got Jim Cramer here giving his opinion on Bitcoin.
I don't want to. What has Bitcoin ever done for mankind? Do you ever, are you ever on a Bitcoin phone? Watching, come here, I need you. I mean, what's it?
Well, coming up, United Healthcare is apparently in.
There's underperform.
Jim Cramer himself can't believe the movement in Bitcoin, right? And obviously the inverse Cramer, if you didn't know it, is actually a pretty good indicator of where prices will go. And literally the price of Bitcoin has scrambled his brain. And the interesting thing about that is Jim Cramer is basically a good representation of how the majority of people are actually viewing the movement in Bitcoin. Most people can't actually believe the movement in Bitcoin. Most people aren't backing it. I'm talking about retail, by the way. Most retail aren't backing that movement in Bitcoin. Most likely because the drawdown that was seen back in 2021, 22, it's probably still too new to them. And you can see that by Google searches. Even though we're seeing Bitcoin very close to all-time high levels, it's about 10% off right now. the Google search or the retail interest is still very low. You've got Bitcoin Google search trends are dropping to bear market levels despite price highs. So what you've got here is that disparity between price and what the retail is perceiving. The movement that we've seen in Bitcoin is predominantly been driven by institutional money, older generational money, which is more sticky. We haven't seen the retail come on board yet. We haven't seen that peak FOMO situation, and that will kick in once Bitcoin actually surpasses and moves beyond that $70,000, $80,000 mark. We haven't got the backing from the retail. So what that's telling you is that it's a very interesting time right now because retail still aren't on board. Now, once retail on board, then yeah, you can get massive drawdowns after that, but we're not even having that type of conversation right now because we're just not there. Retail haven't yet got on board with the movement, the increase that we've seen in Bitcoin. So if you're looking at Bitcoin right now, it's a very smart thing to do because you're ahead of the curve. Now, in terms of the movement that we've seen in Bitcoin over the week, it's a week of two halves. Monday, Tuesday, Wednesday, big movement up in the price, leveled off around that $62 mark midweek and has been trading sideways. Now, a lot of people think that sideways trading action is actually a bad thing. It's not. It's actually a good thing in this case. Gives price time to cool down. What you've probably got going on is a counterbalancing act between those who might be FOMOing in and those who are selling their position. Right now, stabilizing at that $62 mark, just trading sideways. That is a very common characteristic of Bitcoin, to see it trade sideways for a number of weeks. That's a sweet spot. That's a good position for it to be in, given events that are coming up in the very near future. Now, in terms of when we should be seeing all-time high levels, what my expectation is, we've got a halving event coming up, middle of next month. That is a big event for Bitcoin. That's an event that only comes around once every 4 years. And we got a lot of data to play with based on how price has moved in previous halving events. What my expectation is to see Bitcoin trade sideways for a couple of weeks into that halving event. It wouldn't surprise me to see Bitcoin at that $63 mark in April, mid-April, when the halving event takes place. The next move after that, what I'd actually expect is a potential take of liquidity around that $60,000 level. We've got a lot of built up liquidity as it's been trading sideways. Wouldn't surprise me to see Bitcoin come down, touch that level, move a little bit lower, below that $60,700 level. All right, take that liquidity at that point in time, before then reversing after about a month, 6 weeks, moving higher, and then breaking that $69,000 all-time high level. That's my expectation. That's what I'd expect to happen based on how prices moved in previous halving events. So I do believe the all-time high is on the cards. I do believe it's going to happen after the halving event in April. So sometime in May, June is when I do believe we'll get that $70,000 Bitcoin price. Now, once you break 70,000, there is no resistance above that. Okay, there is no ceiling above that level. So that's when you're likely to get rush of price action, FOMOing in at that point in time, global coverage all across the news. Bitcoin's at all-time high levels. Everybody rushing to buy because they didn't want to buy because they thought it topped out at $62,000. Okay, price pushing very easily from $670 to $80,000. People believing that they want to get on the train. That's the type of event that is likely to be seen sometime in May, June, after about a month of choppiness, liquidity taking after the halving event in April. Now, given the fact that Bitcoin is very close to all-time high levels, what we're actually getting is a lot of people who are giving extreme price targets, okay? $400,000 price targets. The craziest price target I've seen is 9 million. Now, I don't see it getting to 9 million in my lifetime, but $400,000 is a number that isn't rare to see. But is there any realism to Bitcoin getting to that $400,000 mark? Bear in mind, that's like a 6x, 6.5x on where we're at right now. To answer that, what I would do is look at Bitcoin versus gold, okay? Gold is a store of value. It has been for a very long time. Lots of history behind it. Gold, $14 trillion in value. Bitcoin right now is about 1 trillion. Okay, big difference between the two. We know that Bitcoin is the new iteration of store of value, the digital store of value, getting way more attention, getting way more popular. I told you, got the Mr. Rogers now tapped in, getting calls from their wealth advisors. They're now buying in. Got the institutions now. They are now buying in. It's got the backing from the biggest asset managers in the world. The game has changed from Bitcoin being very speculative, off the grid asset class to now being one of the premium asset classes with a lot of use cases and a lot of reasons for price appreciation. Gold 14 trillion, Bitcoin 1 trillion. Now, if we can continue to see that flow from gold to Bitcoin, which is what we're going to start seeing, there's going to be a lot of diversification in people's portfolios and how they construct their assets. Getting a piece of Bitcoin, you've got a lot of these wealth advisors will be talking to their clients, telling them about the benefits, and they've already been doing so. If you can get that moving from 1 trillion to 2 trillion or to 3 trillion, now you're getting closer and closer to one of these price targets, okay? Not only that, Bitcoin right now, Bitcoin adoption is like 2%, 2.5%. 2.5% of the world own Bitcoin. That's a very small amount. 35% of the population own assets, own financial assets. Again, if you can get that 2.5% moving to the 5%, moving up to the 6-7%, you're getting closer and closer now to that 6x price target from where we're at right now to 400,000. And then you compound all of that by the scarcity value around Bitcoin, the increase